So first of all, we have seen that like various stock markets here in Asia Pacific have plunged a lot, right? Due to the ongoing concern about QE tapering.
Right.
So I would like to hear from you, Will. Do you still expect the short term, like the recovery in terms of the stock market movement in the near term?
Well, the initial fears about the QE tapering hit all markets all over the world pretty hard.
Yeah.
That's a knee-jerk, instant reaction. As far as Asia goes, particularly Southeast Asia, I think Southeast Asia is going to do just fine as the Fed begins to taper. The reason is Southeast Asia, Asia in general, is in much better financial health, financial shape, has a better balance sheet than Europe or the United States. And the emotional short-term gyrations in the market because of Fed tapering is just short-term. You have to look at the real fundamentals. The real fundamentals are that Asia is financially sound, Europe is not, the United States is not. So as they taper, you're going to see, in my opinion, Asia start to decouple from the West. Now, I don't want to get too long-winded, but everybody says that Asia cannot decouple from the West. I don't agree. 60% of the world's population lives in Asia.
Oh, I see.
And there's a lot of consumer demand that is growing substantially, even in China, where they're pushing consumer and domestic demand. So I think Asia is going to do just fine, and I'm quite bullish on all of Asia.
So given the fundamentals that are recognized as quite strong, right? Can we perceive this short-term variation as an investment opportunities? And if that is so, do you recognize any growth potential within any particular sector in the Asian stock market, especially in tips?
Very, very good question. I would buy any and all pullbacks in Asian equity markets, especially in the tip markets. As far as sectors go, I think the best are natural resources. Asia is home to a lot of natural resources. You don't hear much about it, but Indonesia, Malaysia, and Thailand, and Vietnam, Cambodia, are rich in natural resources. So natural resources are my favorite sector. And I would say tourism and travel would be the next best sector. Largely, again, because there's such a dense population in Asia. Their spending power is increasing dramatically. They have more choices for travel. And we have the upcoming ASEAN and APEC, which will make it a lot easier to travel around the region. So those are my two top sectors.
Quite a positive outlook for the stock market. So let's touch upon commodity market as well, because we have seen that like throughout the past few years, the commodity markets have performed quite poorly once compared to the stock market, right? So is the bull condition of this particular market already over, or is it just taking a breather?
Yeah, very good question. I would argue differently. I would say the commodity sector has performed poorly if you didn't see it coming. Okay. I was fortunate enough to warn my investors and subscribers that commodities were going to take a breather. Back in 2011, they were going to take a 2 to 3 year breather, pause, pull back, and that's exactly what they've done. And that's all it is a pullback. We had an 11-year bull market in commodities, starting in 2000, all the way up to gold's record high in September of 2011. No market goes straight up forever. 11 years in my experience, and I've studied many, many markets back thousands of years, in the case of gold particularly, no market goes up more than 11 years. Even the strongest markets in the world do not go up more than 11 years without taking between a 1 to 3 year pullback. We're on the verge of a 3-year pullback. We should see this pullback extend into early 2014, and then we'll have a big bottom in place for commodities, and almost all commodities will head higher again after that.
After 2014, right?
Sometime during 2014. My work shows the bottom coming in early 2014, so we don't have to wait too long.